round of applause to Erica for being here. So now I'm going to have you introduce yourself and tell us a little bit. You don't have to go in. I know there's a ton of background. Let's just like really high level the background and let's keep the conversation focused on Proven Ventures.
Okay, perfect. Well, first, I think I'm not going to totally speak for my professional better half who's over there. That's Nathan. I'm so glad he came tonight. But I think for the two of us to see all of these organizers leading something and see a crowd that we don't largely recognize is like so humbling and so exciting. So thank you guys all for coming, and thanks to the organizers of this for relentlessly putting in your time, because I have a tremendous amount of respect for the work that you guys do to bring this ecosystem together, and I know that that's not easy. And thanks for backing it, Chamber and American Express. That's a big deal. So on me, the reason I have so much empathy for organizers is because when I landed back in Nebraska after a career in public relations, sort of split between New York and Dallas, I started working in the startup ecosystem, and I was largely hired by a venture fund here that is very near and dear to my heart to help their companies grow. And so at that point, if you can rewind back, in this ecosystem, we had just launched an accelerator. It was called Straight Shot, for those of you that are old enough to remember that. We were part of that. We didn't have any incubators yet. We didn't really have any formalized programs for entrepreneurs. There was certainly no startup grinds. And we started to keep building from there and keep figuring out, how do we better support entrepreneurs? How do we better support entrepreneurs building better companies? And then how do we better support them building better companies and more of them? And so that led me to meet a very important person in my world, which is Nathan, who's back there. He and I created an organization that thankfully the Chamber housed and sort of safe haven for several years, called the Startup Collaborative, which actually office right there on the 8th floor. If you ever go up there, it's like beautifully renovated. Thank you, Wells Fargo, for doing that for us. So many companies. This is where Andrew Persai and I, a second time we met, but several of us met there. And what we saw there was that there's no shortage of incredible talent in Nebraska, but there was not an incredible number of serial entrepreneurs. And so when you don't have a lot of serial entrepreneurs, you don't have some of that natural muscle memory of building a business, right? And it's like, you ask a lot of repeatable questions and you run into a lot of repeatable challenges and those sorts of things. And so I think Nathan and I are both really proud of the privilege we had to work with hundreds of entrepreneurs through that program before we ever invested money. And then because we worked with so many founders that were so exceptional, building so many exceptional companies, we thought, well, heck, we should invest in these things. We should put some money in this game and we should help them grow, and we should be part of that journey in a way that's bigger than just as an advisor, but allows them to get the growth capital they need to keep going. And that was really this jump off point for Proven Ventures.
So Proven Ventures itself, let's give kind of like a high level, and we can get into some of the more detailed pieces of how it works, but is different than traditional venture capital, which, Nebraska doesn't have a ton of venture capital, but there is some.
We do right now.
We actually have a lot more now than we did 5 years ago.
Yeah.
Because it's been working, so people are attracted to it. There's more seed funding than ever before. What is the space that Proven Ventures is playing at, and what is the type of capital that you're providing?
Generally, yeah. So Proven Ventures was built on this thesis that there's a lot of really great entrepreneurs in our backyard, and that the culture of Nebraska entrepreneurs, whether you moved here last year or that you are from here, born and raised, is that they're really pragmatic, they build with intention, and they're highly responsible and care a lot about the people that they employ and the business that they do and the problem that they're solving. And so we saw that, and not to say that's always in conflict with traditional venture, but that's sometimes in conflict with traditional venture capital. And so what we thought in that pursuit was, well, there's got to be a different way to do this. There's got to be a way to invest early stage where everyone finds a win and can do it in a way that is sustainable. So we're not asking someone to grow at all costs. We're not asking someone to always burn more than they make. We're asking them to generate a means of control, generate a means of optionality by creating a good old-fashioned business that has cash and customers and those type of things. And so we invest in companies that have pursuits of scale. And I don't want to act like any of our companies don't see themselves becoming unicorns or becoming these high flyers. They do. But they also want to do that without losing control and without getting on this really rickety roller coaster that can be venture.
Can we zoom in there a little bit to that? You said that, sometimes an entrepreneur that's trying to build some more of a sustainable business might be in conflict with the venture capital model. We've talked to other people about that model a little bit and why that might be, but can you explain for people that might be new here or just kind of what does that mean? Like, what does that look like?
I'll tell you what our fund does. Yeah, I'll tell you what our fund does and what we value, and then I can contrast that if that works. Yeah. So what our fund values is founders who are solving a meaningful problem, founders who are really committed to their customers and letting their customers help pull them along through development, through where they're going. And when you think about those two things, and when you also think about this desire to have a good business, a fundamentally good business, that if you took it to the market would make sense. It looks like an old-fashioned business to an extent. And so when we invest in the same way that a traditional venture fund does. We buy equity, we buy a stake of ownership with that company. But where the distinction and where our pathway starts to go somewhat different is that in that investment, we say, here's where we want you to win. We want you to create a lot of cash flow because that cash flow makes you, founder, wealthier. That puts more controllable income in your business to do more things, that allows you to make payroll and not have to call me as a VC and say, I'm running out of runway in 2 weeks. I don't know what to do. It allows you to make better decisions with your back off the wall, where you're thinking clearly and you're thinking with the long haul in mind. It's almost like building a house. Are you building a house to live in it, or are you building a house to flip it? And I don't really care if our founders want to flip a house or they want to live in it, but they sure better build it with intention as if they were going to live in it. Build it to last, build it to be meaningful, build it to be something strong. So when we invest and we buy that ownership stake, those securities, those shares, that equity, we actually build in a buyout strategy at that moment. And in a traditional fund, that might look like my buyout strategy is you get bought out and you move this company somewhere else. And that's fine to us because we're going to get bought out at all costs. We have to make a return. Now, in the proven model, we say, you know what, you're based in Omaha, you're based in Norfolk, you're based wherever. What if you don't want to sell this business? What if you do want to sell this business, but you don't want to be forced into a sell when my fund expires because I'm getting money back to my investor? What if we gave you that option? So with the buyout strategy, what we allow our founders to do is use their revenue to effectively buy our shares back. And so they do that. As their revenue grows, we get bought out. We're obviously highly motivated to help them grow revenue. And I'm really proud to say that across our portfolio right now, if you look at our companies, we've influenced anywhere from 25% of their cash flow to 50% of their cash flow. So we do have a sizable impact on the businesses we invest in, and we help them bring up the amount of money they're bringing in because it's good for them and it's good for us. And so at the end of the day, we get bought out. We agree on a price to buy us out, right? Like we want to hit this multiple. We never hit the multiple if they don't have the revenue to generate it. So we take a giant risk on their ability to do that as well. But that's a distinction.
So are there any ways that you are kind of mitigating that risk that is additional value that a founder might be getting on top of just cash in their bank account?
Oh, meaning if I were to rephrase that question, are we more than capital?
Yes.
Yeah, we are. We are very proudly more than capital. And I think that's an interesting moment in the ecosystem right now. There is a lot of money in Nebraska right now, you guys. I've been in this ecosystem for 10 years. 10 years ago, there was no money, there was no funds, there's nothing. 5 years ago, there was a lot of money. We were all excited. We were throwing it at the weirdest deals ever. They didn't go anywhere. And we stopped doing all that. We said, let's build better companies. Now there are great companies that exist. I would like to think some of them exist because we took a harder focus on generating customers for several years. And now there's a lot more money back. So for us as a fund, we made sure the financial model of our fund, the way we get repaid, is in line with the work we do for our founders. So we can write a check just like any other fund and sit back and watch and see if you guys do well and see if, let me know, send me the quarterly report. If you get an offer to buy, let me know because I want to make sure hurdles, whatever I think I need to do. Or at Proven, we would say, what if we help? What if we participate? What if we act like we're in service of the founders? Because we are. We're a minority owner in that business, which means we have to act with an ownership mentality. And so we do everything from sales calls. I mean, Nathan could probably get up right now and give you this Logica sales pitch because he did it for the first 6 months of that business every day for half the day. I mean, we do lots of lead sourcing. We lead source all the time, I feel like. We do speaking coaching. We do PR. That's sort of an old trick from a million years ago in my world. We think a lot about the different negotiations a founder has to go through. So we're helping one of our founders right now go through a license, data license agreement negotiation. That's tricky. How do you do this? And what's, I think, like a privilege of the role that we get to play and of the fund that we are, it's not just Nathan and Erica doing that work, and it's not just our Burlington GPs. So there are 5 general partners in our fund, the 2 of us, a woman named Lisa Roskins, who's just incredible, another woman who named Hampton, who's like seriously the most humble beast, but has built so many great businesses. And then Brad Muse, who actually acquired businesses. So we always tease, like, Brad's the one that knows how to acquire business. We all just know how to make them to sell. So there's the 5 of us, but we also engage all of our funds investors, which is really, really unique in venture. Well, and in private equity and in fund management in general. So there's a reason that those investors are called limited partners. It's because typically they have a very limited role in the day-to-day operations. So that role, go ahead.
Can we go back just one step? Because I think there are definitely people in the room that are don't have the introduction to like how a
fund works.
GP, LP,
Yep.
like how that works. So can you give
That's
just a high
a good
level
call
of that?
out. Yeah. Okay, good call. Okay. Backing up. Nathan and Erica did not have $10 million to invest
What?
entirely. Maybe we did. No, we didn't. To invest in the $10 million Proven Ventures Fund. So we went on a journey to figure out who else has capital that would align with our vision and our values to invest in companies in this backyard in Nebraska and believes that those Nebraska founders can build things. And in that pursuit, we brought on limited partners. Those are our investors in the fund to help us make a $10 million fund. Along with our limited partners, we have the general partners, those Burlington Capital folks and Nathan and I that I mentioned. We invest in portfolio companies. So those are the 3 players in our world. Our portfolio company founders, which honestly is the peak of our world. I mean, that's what we're all doing this for, is making sure those people are wildly successful and building the company that they're the most proud of and that they're the happiest about, and that they make a lot of money and wealth for themselves.
So what are the types of companies, like what are you looking for in companies that would be a good fit for your portfolio, where you think that they would get the most value out of your model, and also obviously they check the boxes that you're looking for? Mm-hmm. What is that? Can you kind of paint a picture of what that founder might look for? Look for? We had a great day. We met with so many founders today. And Nathan and I, on days like today, where we are like, God, today was awesome. How many great people did we spend the day with? And so I say that only because we really are lucky to work with really awesome founders. And I know it sounds trite, and I know it's cliche to say, like, there's really no jerks either on our investor side or in our portfolio company side. I think there's a lot of great founders in Nebraska and beyond that are going to for sure get a return. That doesn't necessarily mean they're the right founder for us. And so for us, we like founders who do value sustainability, who do value their customer and are building with intention for their customer. We like founders who want more than capital, not that we want to be overt or overly controlling, but that we want to participate and we want to add value, and we can. I mean, we really meaningfully and empirically can add some value. They have to be Nebraskan. They have to be based in Nebraska, and that's either what the stupidest thing we've ever done or what we would say is the smartest thing we've ever done, depending on the investor you talk to. We kind of smoke them out real quick if they think that's not very smart. So for us, it's those things. I mean, we do go through things that have to make financial sense for the fund. At the end of the day, we are investing. And for us to be successful, those founding teams have to be really successful, right? And so we're looking for things that help us understand how committed they are to their customer, right? How did you build your MVP? What did you do to discover that? What kind of insights do you have from your sales process? I still remember one of the earliest insights we had from a company, our portfolio audit miner, that was like, you know what? No one reaches out to a CPA on LinkedIn. And I do. And they always write me back.
And that to us was like catnip. It was like, what? How did you find that out? How did you know that sort of a thing? So I would say those are the biggest values. And then you sort of just get into the mechanics of what the papers say. Like, what money do you need and how much value do we add and what do you want our role to be? And that's...
What's the stage generally that these companies are at when...
We like early stage. We like early. I mean, we've invested in companies that have as little as like, I think less than $1,000 of revenue. I mean, we go early. We don't go early without customer, like, and not necessarily like a lot of dollars from a customer, but without customer in pursuit. I would say we wouldn't get up to a Series A. We like to stay below that, but I don't even know that we play in the same category as like, I'm raising a seed, I'm raising a Series A.
Sure,
Sometimes we do.
With those founders, is there any, like, if someone is kind of on the roadmap to where this type of capital might make sense for them, either from you or for someone else that provides similar type capital, what are some decisions that they have to make early on that would kind of give them a clue to like what types of investors they should be talking to?
That's a really insightful question, Craig. Okay, well, all right. So if I'm a founder and if I'm sitting in my founder's shoes and I'm thinking, where do I get capital from, right? I'm thinking I could go to a bank. I probably don't have a ton of backward-facing financials, so I'm going to have to find a really good banker that trusts me a lot, like Melinda, who will take a bet. Just so you know, Melinda will do that. Find Melinda. I could find a Melinda. That could be an option for me. But typically, and not necessarily Melinda's case at all, bankers don't come with more than money, but they do come with very strict terms on repayment, right? Like you got to make that payment next month. Yeah. It is expected. So there's that, and that's fine. Bankers are awesome. It's typically the cheapest form of capital you can get outside of a grant. Grants are great. The next variation is I'm gonna go on a risk with somebody that knows they may lose all their money, but now I need to decide what is my role in that. And so for us, when we look at companies and when we're thinking about that founder, our founders are typically asking questions about how do I continue to grow my revenue? I do want to see profitability. I don't have this desire to be the next WeWork and burn and literally crash. I don't think that that's my pursuit. I do think it's important that I know how to pay my humans. And I also think that even if I'm going to raise a Series A or I'm going to take money from a private equity fund down the road, that the single greatest influence on my valuation, which everyone's so fixated on, is my revenue. And so our founders tend to agree with those type of things. And that would, I think, be the moment where a founder would say, that's a mechanism of control I want, because I want to be able to either buy my shares back for you or grow with you or have the control along the way with you.
I have many more questions that I could ask, but I want to open it up to questions in case anyone has questions. Don, you want to start?
Thank you. Yes. Erica, you mentioned the word grants.
The state of Nebraska has some really awesome programs for business that are really competitive, right? And so if I'm in a founder's shoes right now and I'm like, how do I get that next 10K to build my prototype?
Right.
There is a program through the state of Nebraska called the Business Innovation Act that will match your dollars 2 for 1. If you're an ag business, it's 3 for 1 or 4 for 1. It's like nutty. It's real nutty. It's real good money, real cheap money for you.
When I was in California, I was talking, I love bragging about the BIA.
It's so good.
Because a lot of other states do not have, there are states that do, and there are states that have even, more advanced. They've been doing it for longer. But there's lots and lots of states and other countries that are like, yeah, we have no support like that from our
it's
local
so
government.
It's so good.
So people that are not taking advantage of that or don't know about it, I think we could do a better job just telling people about it. But yeah. Any other questions?
Yes.
I want to go back to your question a little bit on sources of funding. I have had so many people say, don't take anybody else's money until
you absolutely should not take anyone's money until you need to. And then and I actually said this to a team today that I'm a bit smitten with, and they don't need money at all, but they want partners. And I think that is the distinction on choosing revenue as a growth mechanism versus burn as a means, right? And I'm not saying that you can always bootstrap a company, but if you can, and you're in a position to, it really helps you in the long run to figure out how to do that.
Yeah.
And if you can't figure out partners or capital that fit what you really need.
Right.
But know that money always comes with strings, right?
Yeah.
So everyone has an expectation for getting, unless it's a grant, they have an expectation for getting their money back. And that I think is sometimes lost in venture.
Yeah. Justin?
Yeah, so I had the pleasure to work for a startup here in Omaha called Shop, and it was in a very interesting conversation today with our meetings. We were talking about product market fit. So it's kind of a two-parter here. We'd love your thoughts on specifically defining it, and then broadly speaking from the position of trying to help the founder kind of go through that and understand.
Fine.
What steps do you guys take to kind of help answer that question for founders?
That's a great question. And then, by the way, the company he works for has two founders that I'm also very smitten with that bootstrapped and then were acquired by big brands. So, like, if you want to hear about bootstrapping that does well and, like, you really hold your equity scarce, I always tease those two guys. I'm like, I'm your third board member, right? They don't ever keep our group text with that title. They should, though. Product market fit is interesting. And I actually think this is where I know I for sure, and I think Nathan does too, get really, really nostalgic about our last act as a co-founding team, which was an organization called the Startup Collaborative. So what I loved doing there and had the pleasure of working with founders to do was way before you ever build a product, you find the market. And you talk, I mean, this sounds so rudimentary, right? But it's like, what problem are you solving? And who has that problem? And do you think there's more than one person that have that problem? Do you think there's like maybe 20 people that have that problem? And could you talk to them about the problem? And could you find out, like, does it really hurt? Does it not hurt a lot? I like to use this example of Audit Miners. This is one of our portfolio companies. Kelly Mann, if you guys haven't ever met her, is, I think, honestly, she's going to go down as one of Nebraska's greatest founders. Mark my words right now. I will be so grateful to have been her partner this whole time. She was a CPA, and when she first came in and met with us, we were like, oh, this should be a great meeting. She's a CPA that makes me love CPAs as founders now, just so you know. She said, hey, I do these 401k audits. So anyone in here, we're in an entrepreneur community, so if I asked you to raise your hand if you have a 401k, that's not really fair. But if I was in a corporate community, more hands would go up. There would be more hands up. So if you have a 401k and you work at a company with more than 100 people, your company is federally regulated to audit that 401k. And the process to do so is literally copy and pasting PDFs that they pull down from Northwestern Mutual, they pull down from Mutual of Omaha, they pull down, and then they dump it in a spreadsheet and they reconcile. It's hugely ridden with error. It's gigantically laborious. And Kelly's telling about that. She's like, I think tech can solve this. I don't really know how tech can solve it, but I think tech can solve it. And we're like, yeah, that sounds right. Let's talk to people and see. Kelly is so intimately involved with the problem of her customer that she launched last March, April-ish, sometime last year. It's sort of pandemic-y last year, so as we know, that sways. She has already this year hit all of her 2021 revenue goals in the first 90 days of the year. And I would say that's product market fit. But that is before she built she knew this was going to happen before she built a product. And she was so insanely intentional on the build of her product that for those of you that are developers in the room, let's just say the code isn't that fancy. Like, it's not that fancy. They're still on their MVP. And she's like printing cash because she's doing so well. So all of this to say, I think product market fit looks like talking to customers before you build a product. It looks like understanding their problem. It looks like listening really closely to what they're telling you and what they're not telling you. And not just thinking functionally about that, but thinking about the individual person and how you make them win, right? Because at the end of the day, we're all selling. You're selling to an HR person or a corporate comms person that has to look like a hero.
That was the best quote from Keith Fix's interview was, our biggest problem is that our customers keep getting promoted.
Right. You have to make your customer a hero. And it's Keith is another good product market fit founder because he understood that market. He understood what they were losing at. He understood where they were
got a
losing
customer
money.
to pay for it before they build anything.
Yeah, they sure did.
Yeah.
I deeply remember those Raspberry Pis that they were using for way too long. Yeah.
Great. That's a good answer.
Did that help?
Yeah, that's great. Thanks, Erica.
Yeah, don't spend money to build until you can figure out if you can make money on their problem.
Yeah.
Do you think, even though in the old school ways of thinking from the rock to Web 1.0, even Web 2.0, Omaha, Nebraska, and Midwest has closed the gap between coastal cities, whether it's intellectual capital or development time or monetization values? Is Nebraska at the GPLP stakeholder, founder, operator, fan base level embracing all these paradigm shifts the way that I see it happening around the world in a very chaotic, convoluted sense? The only way I can kind of herd the cats is on LinkedIn, where I can identify subject matter experts from Zoom to Singapore in 2 minutes. I can fire up a Zoom call and hook up with subject matter experts anywhere on the planet. But I have a hard time getting in my car and hanging out with an attorney or anyone in a 5-mile radius. So
I would say Nebraska talent outkicks our coverage every time. And I think if there's some people that you want to go have coffee with and talk Web 3.0, there's like 5 in the city that are building some of the most exciting companies in that space right now. And so I would shout out Kyle Tudd, who used to organize stuff like this with us. He's building a company called Pinata. It's a Web3 company, blockchain-based business. It's like the darling of Silicon Valley crypto investors right now.
When I was in San Francisco, so the whole Startup Grind conference was based around Web3. And every time I mentioned Pinata, people knew.
Yeah, they know
that was.
Pinata. And they know Pinata
And they're
because
like,
Kyle
that's a great
knows
company. Like,
it's an incredible
or they use
company.
it because it's part infrastructure for a lot of the like NFT.
It's like the Rails for them, yeah.
So I
Yeah,
guess
yeah.
what you're saying is turn it into a positive or point of inspiration for everyone. If you live in Omaha or Sydney or in a little village in Malta, the point is if you can dream it, you can achieve it because the new tech exists. So whether you live in Elkhorn or Miami, you got the same odds of survivability and achieving your dreams as there's ever existed.
Yeah. I think you're right. I think so. It's interesting that you point out like the finding the subject matter experts and otherwise. So what we have those humans here, but we are still sort of at our core Nebraskans, and this is why I say my PR career tanked because everyone's so stinking humble. Like no one wants to brag about how good they are at everything here, and so Kyle Tutt is literally a celebrity in the Web3 space. He would never, I mean, he's going to freak out when he hears this. He would never, ever say that about
He's
himself.
never going to speak at one of our events.
He's not going to. He's going to be so mad at me. But he's not the only one either. I think about Ingrid Waddell over at First National. First National is the largest privately held bank in the country. They have an entire division dedicated to crypto, of which Ingrid's building out one of the most interesting use cases and reasonable use cases of blockchain I have ever seen. I mean, Nathan's way closer to this than me. But what I think Nebraskans do really well, and Kyle and Ingrid are great examples of this, is they're not caught up in an NFT for NFT's sake. They're caught up in the business use case and the industry changing. So it's sort of less sexy and it's less cool, but it's awesome at the same time, right? Like Ingrid's work is considering, and then this matters to me because I like the Santos so much, and that Santos is like God's country for cattle. She's helping cow-calfers better track the value they create throughout the lifespan of that cow. And she's leveraging blockchain to do that. And that, I just think, so to answer your question, do we have the talent here? We do have the talent here. They are still so humble, but they are great to have coffee with. And I would be happy to connect you with some of those people if you don't already know them. I'm guessing you do.
Thank you.
Yeah, great question.
That's my question, and kind of piggyback on it's even that interaction between that town and you guys' venture capital program. How's that relational component? How's that made? How do you find out about each other?
Well, hopefully we're doing a good enough job to like be approachable and meet you where you are. And I think meet you where you are means like, are we on your smartphone when you're thinking about things? Meet you where you are at that moment where you're asking yourself questions on not just even capital making sense, but like, does this make sense as a business idea? At our fund, we have a rule. We take every first meeting. We want to support every founder. So we try to be useful, even if it's a no for us. So I would say our fund tries really hard to be super approachable. I mean, candidly, we are still really heads down, which we're working really hard on not being so heads down.
Great.
I've been doing a lot of research, and many people that are labeled disabled across the country and in Nebraska are an untapped labor force, and we know the fact. One of the things that I have a real heart for is the fact that many, including some personal friends that I know very well, are gifted and talented learners, and that's part of the reason they're on the streets and part of the reason they're in the mental health institutions, substance use and addiction. I talked to Nathan a long time ago about some type of web application or mobile app. What I'm wondering, are there any companies that you're aware of that are even doing gifted and talented work other than, there are some assessment companies, there's psychologists doing the work. I've never seen a company doing work gifted and talented to help, not as a nonprofit, not as higher ed or assessment, but actually channeling the gifted and talented workforce.
I have seen really interesting attempts at helping people find pathways that make sense for them, right? Like, if I do this, where do I end up here? I've seen really interesting attempts at how do I curate, I don't want to say learning experiences and pigeonhole it in like higher ed or college, but like, how do I curate experiences that round me out as a person? But I don't know that I've seen anything head on, like get me into the workforce type of a role.
I think that's the answer.
Yeah. You should build that. You should talk to 20 people about that problem. And then you should build that.
do your customer research. And
Yeah, talk to 20 people. If you need a script, I'll help you.
Thank you.
Yeah.
How do you pick and choose how much equity that you like to partner in with a founder? Or what are some examples of maybe base models that you start on?
Yeah.
Maybe you're setting up those partnerships and then customize from there.
How do we set our valuations? Yeah. So this is funny, Jake, and I had this conversation over a really good latte yesterday. So I think
where was the latte?
it was at Millwork. It was great. It was at Archetype. It was really nice. He had a very plain one though, and I don't know that it was as good as mine. But it was a great conversation on valuations, and I think at the end of the day, we all have to remember that whatever we're pricing actually has to be able to sell at that price or whatever we predict that price can be down the road, right? And so I used to sort of have a lot of these talks with our startup collaborative founders. Your valuation isn't actually what your business is worth. We only know what your business is worth until your business sells, right? Or until someone's willing to pay an amount of dollar for it. And so I think valuations are oddly emotionally heated. And I think they're right now really frothy. But every investor is going to say that, right? Everything's too expensive. But ultimately, you kind of look at a business and you think, okay, well, what's their revenue? What do you think 48 or 72 months on that revenue could look like? Let's talk about this founding team. That's an exceptional team. That's worth something, right? Someone could acqui-hire that. That's good. IP is sometimes worth something, sometimes not. Are there any processes about this business that make it really valuable? You try to be as objective as possible. Ultimately, it's this weird dance of like how much, when, and then everyone, if you do it well, everyone agrees that everyone won. But they're so weirdly emotional. Such an emotional thing.
Especially there's for traditional businesses, there's
Comparables.
Yeah, and kind of formats for this is how you value a laundromat or something that has assets or has a long-term either similar businesses or they've had revenue for a long time. The nuances of evaluating something that's a year old that's completely novel.
Yeah, you're forecasting out.
Yeah.
That is really hard. and I don't think anyone does it really well. We try, I would say as a fund, we try a lot harder to look like not necessarily the private equity ownership target, but the private equity valuation model, where, if we can stay in that lane, it's a lot easier for that founder down the road to get more investment if they so want it.
All right. Well, one of the core values of Startup Grind is give first. And we end each talk with, is there any way that the people that are in this room or the Startup Grind community as a whole can help you improve in ventures?
I appreciate that a ton. And I would say, for Proven, if you're thinking about a business, we'd love to talk with you about it and see if we can be useful in that process. But then I would actually make my official ask, support the organizers of this and make their job a little easier and help them clean up and help them set up and help them market
We're looking
it.
for volunteers. So.
Yeah, help the organizers, because these things are hard to pull off. So
Yeah. Well, thank you very much, everyone. Let's give her a round of applause.